Welcome to today's market report. European stocks hovered at 8-month highs on Tuesday on optimism around signs of a breakthrough in developing a COVID-19 vaccine, although concerns about the depth of the economic damage from the pandemic capped gains. The pan-European stock 600 was up 0.2% this morning after rallying 4% in the previous session, as US drugmaker Pfizer Inc. said its COVID-19 vaccine developed with German partner BioNTech SE was more than 90% effective in preventing the infection. Banking, travel and leisure and energy stocks were among the biggest gainers in early trading, following gains of more than 7% on Monday. In corporate news, German sportswear firm Adidas fell 2.2% even as it said it expects sales to return to growth in China in the fourth quarter. Heavily indebted Norwegian Airline might have to halt operations in the first quarter of 2021 as it struggles with a coronavirus travel slump unless it secures fresh funding. Oil prices jumped yesterday as the Pfizer BioNTech COVID-19 announcement triggered a massive rally in oil. The fast money immediately priced in a return to 2019 global normality as Brent, crude and WTI both traded 10% higher intraday yesterday before easing somewhat into the close. Brent crude finished the session for 5.95% higher at $42 per barrel. WTI ended the day for 6.50% higher at $39.75 per barrel. Gold futures were up 1.47% at $1,881.60 per ounce. On the FX front, GBP USD recedes to 131.60 during the initial hour of Tuesday's Asian session. The pair refreshed a 2-month peak on Monday, but failed to stay positive beyond 132. The bullish signals from the MACD joins strong RSI, not near the overbought region, favoured GBP USD bias to keep the optimism while targeting a resistance line stretched from 10th of September at 132.46. In doing so, a clear break above the recent high of 132.08 becomes necessary. UK October jobless claims changed minus 29.80k versus the plus 36k expected, released this morning. The UK's official jobless rate ticked higher to 48% in September versus the previous 4.5% and 4.8% expected, while the claimant count change showed a surprise drop last month. The upbeat UK job data, however, had little to no impact on the pound, whilst according to the UOB group, it is expected the pair to attempt to move clearly above 132 and a break of 130.65 is not ruled out. UK Prime Minister Boris Johnson suffered a big defeat in Parliament's upper chamber on Monday over proposed laws that would allow him to breach the terms of Britain's European Union exit treaty. Reacting to the result of the vote, Labour's leader in the Lords, Baroness Smith, said, "I'm sure some in government will initially react with bravado and try to dismiss tonight's historic votes in the Lords. To do so, however, would underestimate the genuine and serious concerns across the UK and beyond about ministers putting themselves above and beyond the rule of law. The government should see sense accepting the removal of these offending clauses and start to rebuild our international reputation." The House of Lords voted 433 to 165 to remove a key clause in a section of the bill which could give ministers the power to unilaterally override parts of the exit treaty relating to Northern Ireland. Now that peers have voted to remove the clause, Boris Johnson will have to decide whether to reinsert the clause before the bill's return to the Commons in the coming weeks, despite its potential to jeopardize a trade deal with the US. The President-elect Joe Biden has made it clear that he believes the proposals threaten the Good Friday Agreement. Eurodollar has retreated from its high above 119 amid the market seesaw and as most of the continent remains under restrictions. US politics, German data and coronavirus headlines are set to rock the pair, while Tuesday's 4-hour chart is painting a bullish picture. It seems that after the euphoria of the vaccine news and the hangover, optimism about a vaccine could push markets higher and the dollar lower. Although it is essential to note that the Fed continues buying bonds and likely to keep a lid on yields. The dollar index was little above the 10-week low of 92.12, trading at 92.778. Dollar yen was at 105.3. This is today's market news. Thanks for listening. We'll see you next time.